So that's all I use it for. It's just a flag, because 1 minute is not a lot of time. And typically, if buyers and sellers are going to overrun an area, they're going to do it with a lot of volume, and they're going to do it in a very short amount of time. So the 1 minute chart for me, with that, I don't really care about buy or sell volume. I just care about the volume overall. That gives me a really good heads up to go at that point and check out the print. The other thing it does for me, as I'm looking at the day, beginning of the day, I sit down to my computer and I'm starting to look what happened in the overnight. It's one thing to look at a volume profile in the overnight. It's yet another thing to go back and look at that 1 minute chart and say, it tells me very quickly, where did a lot of volume come in. I go over to my structure chart and my order flow chart. I look at the volume cluster. I get confirmation of the type of volume, and then I start watching to see what it did to price. How effective, remember that's the second part of the question, how effective are those participants in doing what they're trying to do? So if I can see, using the print, the structure chart, that volume's coming in at the bid, meaning what would be considered sellers, I can see what it does to price. And if it does nothing to price, that gives me information. If there's another spike, they try to move it lower, it gives me information. It starts telling me there's likely stops down below, buyers are holding. This is an area I want to start identifying as a potential trade long. So 1 minute volume chart, it shows volume spikes in a relative small time frame. It acts as just a call out to reference the order flow and structure charts. I want to be real clear. I'm not using that chart to trade. I'm using that chart as just a call out. I also use a 2500 tick chart for open and closing swings. And here's the reason again. Our closing swing yesterday, let me go back here. The closing swing for yesterday was 1931.75 to 1933.75. And what I've told you is a lot of times these closing swings will have relative meaning in the Globex, in the overnight session. Now, again, I've got a pretty sensitive probe and rotation chart, right? 6-4. But that the move down at the end of the day was all probe. There was no rotation until after the market closed, and we were down to 28.25. So even with a tight probe and rotation, if the market keeps probing without the rotation, then I'm likely going to miss that move. And you can see in the overnight, right, price started moving back up, and it hit the closing swing low, went weak at the offer, and from this point, 31.75, move 4 points. Move 4 points off of this level. Tried to come back up, and in the European session, couldn't get through opening swing high or closing swing high, started failing, and once it failed at closing swing low, it became a 31 to about a 9-point trade. Closing swing is the last push by buyers and sellers in the ES, in the market. And it's this again is a fairly simple chart. Again, my system is a little bit slow here. Let me bring it over and show it to you. And let me show you the opening swing for today, right? Because I use this for opening swing and closing swing. We're going to go through this again, not to worry. When we start looking at actual trade plans, we're going to go through this again. So this is a super simple, just 2500 tick chart. And the only reason I use this, is to identify opening and closing swings, because we're going to go through this, but most of the volume in any auction comes at the beginning of the auction and at the end of the auction. Even if take eBay, for example, right? An auction opens and there's a whole bunch of bids and it bids itself up. Then the volume comes down. Let's say there's a week long in the bid in the auction. There's an initial push to some level of value with more volume, and then it just kind of sits there, maybe a few more bids here and there. And then right at the end of the auction, there's a whole bunch more volume and a whole bunch more bids. I mean, that typically is what an auction is. When there's an open, when there's a close is when you get the most volume, which is why I use a 2500 tick chart. And the open for today is right on yesterday's open. It was 25.50. So I go back to 8:30 at our open. I'm sorry, it wasn't as yesterday. Here, 25.50 was the open. And now all I'm doing is looking for the first push higher, which is right there. And I'm looking for the first response push lower, which is right down here. And that simply right there becomes my opening swing for the day. That's it. There's my open. There's my first push by buyers. There's my first push by sellers. And what you will find, not necessarily today, but what you will find, for example, when price broke above opening swing high, it stopped back at opening swing high and moved higher. You can see it came through, back down opening swing high, couldn't get back through opening swing high except for a couple of ticks, and then moved lower. Once it broke through opening swing low, the likelihood, and this was at news, but the likelihood was that it was going to keep exploring and probing lower. And you can see it's having some issue around opening swing low right now, but it looks like this is going to make some progress. So these just become levels and levels after the open that I pay attention to. So as price is moving up, and somebody asked me this question yesterday, how much weight do I put into the open? You know, I'll watch the open right now, but it's already proven to price is just passing through the open. It doesn't seem to have any relative importance, at least at this point. So price has moved up, and I'm not even looking at the print, I'm just looking at this. And so what I would be looking for is a potential long, and all I'm using is a 2500 chart, is a potential long off of this level. Of course, I'd go back to the print, make sure that the print confirmed that, in fact, sellers were walking away, buyers were stepping back in. And if that were the case, then I would look for price to move up and low, and back up to open, and possibly up through opening swing high. So that is it. That is all. It's the only time I use that chart because even with a probe and rotation, I might not get that initial push. It's a tick chart. It's not a volume chart. It's a tick chart. It's a 2500. Oh, you know what? It might be. It's supposed to be you are correct. 2500. Let me go back here a little bit. You are correct. That was, let me go back here, hang on a second. It's kind of the same thing. Here's the open. Here's the first push by buyers. It's a good clarification though. First push by sellers. You can use a 25. No, hang on a second. Changing things on the fly here. Sorry about the delay. Yeah, I would 2500 tick chart. Here's the opening swing high, opening swing low. It kind of shows the same thing, but just for clarification, make this a make that a 2500 volume chart for opening, swing high and low. Thanks for the clarification. Yes, I plot those manually, opening, swing high and low, because it changes every day. Does it matter? Yeah, John, just make it a 2500 volume chart. 2500 volume chart, just to clarify. So why is this open swing high, closing swing high or low important? It's important because in an auction, it is a series of push and pull, right? There is this effort by buyers to push price higher. There's this effort by sellers to push price lower. And from the open of the market, I want to understand what is the result of that push. What's the result of the first push by buyers? What's the result of the first push by sellers? It's my first indication of the day and my last indication of the day of the buyers and sellers sentiment, where their conviction levels are to. Does that make sense? So all it is a reference point for me. And I'm using it only as a reference. And I think I've shown you in the last 2 days the value of the closing swing. I'm telling you, in the Globex market, the closing swing high and low often acts as a great reference point for trade opportunities in the overnight. Doesn't mean that they will always work. That's why you always have to go back to the print and use the print as your trade entry and trade management tool, which is why we start reading the print, using it as a trade management, trade entry tool. So those are the only other, this is tick, I'm going to change that to volume, a 2500 volume chart for opening and closing swings. And I'm going to show you closing swings, so don't worry about that. We're going to go through that again. It is, again, the most volume in any auction is at the start and at the end. And the other thing, this 2500 volume chart, not tick chart again, thanks for the clarification, it's for the S&P 500 E-mini. Now, you know, if you try to do a 2500 volume chart on oil, you're going to get, or the TF, you're going to get a swing that, you know, takes the first 10 minutes of trade. It's going to take a long time. The 2500 is just for the ES because it has so much volume. But historically, it's been an excellent setting, the 2500 volume chart, to identify those opening and closing swings. So I don't want to spend too much in the morning here on this because it's all those two charts are. The minute chart is just sets a flag for me. It says go look at the print here. The 2500 chart, all it does is say here's the first push, here's the last push by buyers and sellers. Flag it, identify it. If there's any confluence around it relative to how the day progresses, then potentially use it, but I'm just identifying it. So other volume tools is order flow and structure chart. Everybody has been through that. We're looking for aggressive buyers and sellers. The order flow confirms trade opportunities. The structure chart shows us structure in the different bars. Can show a finish to an auction in a specific direction with order flow. If we see, for example, prices moving down and we can see sellers backing off, buyers coming back in, it can help support what we look at in the volume profile as a potential finish to one side of the auction. And it can also show in the order flow, we can see held bids and offers. So we can see volume coming in, let's say prices moving lower, we can see more volume coming in, we can see activity at the bid building. They're hitting the bid, they're hitting the bid, hitting the bid, and they keep hitting the bid. A lot of pressure at the bid. The offer may not even be that strong at that point. We just see the bid growing, but price is not moving. And so our immediate reaction is right now, and that's always your thought, is right now. You don't know what's going to happen in the next minute. Right now, buyers are holding the bid. If buyers are holding the bid, what do I need to see to take advantage of this? What do I need to see in the print to take advantage of this? Well, I need to see strength coming back in at the offer, just above where buyers are holding the bid, and I need to see weakness at the bid as strength comes back into the offer for me to take a long. Otherwise, the sellers may just get to a point of overwhelming the buyers. If I try to go long before the print confirms it, I'll get washed out of the trade. So the order flow can show us held bids and offers. You know, people can talk about iceberg orders and all of those things, and I've seen indicators out there, and I'm not here to say that they're good or bad or indifferent. You know, iceberg order indicators. What I would tell you is don't rely on an indicator. If you see a held bid or a held offer, all it tells you is right now, buyers or sellers are holding this level. I'm looking for this to give me a potential trade. If I don't see this in the bid, I don't have a trade, because when this much volume comes into the market and we're getting this much pressure either at the bid or the offer, anything can happen. So I'm going to sit on my hands. I'm going to wait until I see these things happen, and then I'll make a decision on a trade. Roberto, to answer your question, those two charts adds to context. Absolutely. Thank you for saying that. I could not have said it better. It adds to my context. It is just another piece of the story for me, right? So when I talk about reading the order flow as a process, what I'm doing is I'm building a story. I'm building a story about the market participants that says, here's where their fair prices are. This is where I see volume and they like to trade. Here's where they seem to get active. Buyers get active. Here's where sellers seem to get active. And so I'm building a story. And that story helps me to develop a trade plan, a developing trade plan as the day is developing. And that's what context is to me. It's the story of the market. And that story is a story over the current day from the open. It's a story of the overnight trading. It's a story of the combination of them together. And again, what I wish I could tell you is that there was some easy way of taking all of this data and telling and being able to create just a quick summary that says, all right, here's what the market's trying to do. Here are levels, and we can get to levels pretty easily. But to be able to identify when change is occurring in the market, when buyers and sellers are changing sentiment, when you can do that by building your story, at that point, you can start to move around into different instruments and understand the nuances of that instrument, but you can start building the story in those other instruments and becoming an incredibly effective trader in other instruments as well, and other trading methods as well. So that's a perfect response, Roberto. It adds context. That's perfect. Does the opening swing low have to be below the open? That's a great question, Dirk. You know, if we have what's called an open drive is an open type, and we're going to talk a little bit about that over the next couple of days. But an open drive is an open type, and it was one of the things from yesterday that I talked about that is a remnant of market profile that still has value to us as traders. So understanding an open type, like an open drive. So if price opens and there is no successful trades at the offer below the open, and price just moves up and starts creating distributions higher, then the open becomes the opening swing low. And then I give the open a little bit more weight as price, and if price moves back down to it. So great question. Does that answer that question? It doesn't have to be below the opening. It's very rare that it isn't, but it doesn't have to be. Okay, awesome. Okay. So these are just with order flow and structure chart, different things that they can do. Let's talk a little bit about, we're moving on to about an hour, a little over an hour here. Purpose of the volume profile. The primary purpose of the volume profile is several purposes, is to provide an accurate display of the market participant activity in the form of a profile. and also to provide context of market participants' price, interest, and non-interest, meaning basically where are fair and unfair prices. But it can also provide identification when an auction might be coming to an end. I'm going to show this to you today, and it will be fun for you to see this. Areas of opportunities for entries and scale and target areas. So if I can see a low volume area, low volume typically means an unfair low or an unfair high. Let's say price is coming up to an unfair high, a low volume area. We see buyers step away, sellers step in, and the market starts moving back down. The scale or the target is going to be back at that high volume area or VPOC because that's fair price. And it's most likely that price is at least going to fair price. I'm going to show that to you today. Some of the benefits of the volume profile: you're able to see what prices buyers and sellers consider to be fair and unfair, especially over time. The other one is it's incredibly visual. It allows for very quick identification of key levels, and it can adapt to all types of market conditions and different volume levels. So again, we talked about on the TF, on the CL, on the ES, the YM, all of the volume is relative to that instrument, that specific instrument, and therefore it becomes able to adapt to that certain or specific instrument. It will identify areas of opportunities for long and short trades, and it provides excellent scale and exit points for managing trades. Why is it unique? Well, it's not really an indicator. It's a historic framework for market participant activity, showing where they are likely to trade more and less volume. We're going to talk specifically today why a low volume area is an opportunity for trading, why a high volume area is an opportunity for a target. The volume profile provides low risk, high reward. One of the things, we're risk manager first, high reward trade opportunities more consistently than any indicator does, and it also provides and shows you the opportunity well before the trade actually occurs. And like the print, it does not lie. It is made up of the order flow. It is made up of only actual contracts, stocks, whatever the vehicle, only made up of actual order execution. So it is truth. Just like the print, the order flow, it does not lie. So this is why yesterday when I talked about the fact that you can have high frequency trading, you can have dark pools, you can have all of these types of entities, institutional buying and selling, all of these things happening. But at the end of the day, they all get represented in the volume profile. So it shows all of their interests, not it doesn't exclude any one participant, which is why over time the volume profile adds more credibility or has more credibility in the levels. And again, it shows market sentiment regardless of who's trading. Computers, algorithms, doesn't matter. Locals, individuals, doesn't matter. I think it's important to understand what the volume profile is not. It's not a predictor of price in any direction at any given time. Unless you're sitting on $50 billion in your account, there is nothing that is a predictor of price direction at any given time. There's no indicator, there's no setting, there's nothing that can literally predict price. What we can do is see the structure and the framework and identify, as we build the story, identify areas of interests both for an entry and for targets within the market. And then again, we always go back to the print to confirm that what we expect to happen is actually happening. But nothing is a predictor of price. If anybody ever tells you anything is a predictor of price, just run very fast. It's not a technical indicator, right? So it's not calculating certain combinations of volume over time, over price. It's not a technical indicator. It is simply a representation of the activity, the executed activity over a specific period of time for a specific instrument. The other thing is it's not really widely used. I would tell you that those who learn how to use it as an additional tool in their trading, find significant advantage to those who really don't know how to use it. So those who learn have a significant advantage because it provides additional context. It's also not a trade confirmation tool. That's why we go back to the print. The print is our trade confirmation tool. Remember, the moment of truth, when we hit the button in our trade, what we care about more than anything is what the current buyers and sellers are doing, specifically doing to our trade. You know, like I said yesterday, our trades are like a leaf in the river. But if we want our river to go north and the river's running south, you better get a net and get that leaf pretty quick. Otherwise, it's going to take off south on you. So the print is the trade confirmation tool. It tells you what is happening between buyers and sellers at that moment of truth. It's also not time dependent. Though we do look at volume across time or rotations and in specific sessions. So I'll look at a volume profile for the RTH session. I'll look at a volume profile for a Globex or evening trading hour session. I'll also look at a volume profile on a Globex session across Globex session. It's not time dependent. What I care more about in a volume profile is making sure that I have the data that represents the push higher and the sentiment by buyers, and the push lower and the sentiment by sellers. I care more about that than I do about the time.